Wonderful. Now, our course itinerary for Market Madness is very simple. All right, we start with our technical analysis. Now, our first course, which is today, I'm going to introduce you to the trading plan, and then we're going to start our first step before trading, meaning will be our first strategy. Second course is inside our first course, so it doesn't matter. I'm going to teach you how to minimize your losses and maximize your profits using support and resistance only. You're going to learn that with that, you can assure yourself a maximum amount of profit. Our third course is the same subject, all right? We're going to learn expectations and knowing when to open positions. All right, so this will be next week. Now, our fourth course will be about pending orders. I'm going to teach you exactly what pending orders are, definition, and basing them as a strategy. We're going to use most of the time pending orders so that it'll be much more easier for the trader, for yourself, to know when to open a position instead of being in front of the computer at all times, all right, and waiting for a market movement to move in in the position that you want it to be opened. Our fifth course will be our first indicator. Now remember, I'm going to teach you the 3 best indicators in the market. All right, I'm going to teach you exactly the definition of these indicators, and also we're going to use a strategy for these indicators. So this is on our 5th course, our 6th course, and our 7th course. All right, our 8th course, I'm going to do a full review of our technical analysis. Now this will be very, very important to be part of our 8th course, simply because it's going to we're going to analyze everything that we have said in our 7 courses. All right, and then what we're going to do is at the end we're going to learn how to build one strategy using everything that we have learned. Our second part will be fundamental analysis. All right, so this will be our 9th, 10th, and 11th course. All right, we're going to start following the news for our currencies, the currencies of our choice. We're going to start learning what is economic calendar and what to expect. All right, 11th course is building at the end the trading plan. Now, of course, at the end of our full Market Madness program, we're gonna finish building our trading plan so that we can start opening short positions, perfect positions, even though it's not 100%, but it's our chances of opening positions following our trading plan will be much greater than they already are. Now, let's start. Okay, this is our trading plan. This is our first section of our trading plan. What is exactly a trading plan? Trading plan is very simple. It's a plan, basically having everything in front of you. Before you even start trading, you need to have your trading plan next to you. Now, what exactly do we have to have in our trading plan? It's very simple. First of all, what you need to do in order to start building your trading plan is that you will need to start choosing and concentrating on major currencies. Let's say, for example, I choose 3 currencies of my choice. All right, I want to have I chose, for example, Euro US dollar, Canadian dollar US dollar, and Euro JPY. Now, what I want is to concentrate on these 3 currencies and trade on them only for now. What I'm going to do is that I'm going to analyze each currency depending on the indicators, what we're going to teach later on, what we're going to learn, exactly what news are there for the currency, for example, the Euro CHF. We know that, for example, the ECB, the European Central Bank, whenever President Draghi speaks, it takes a lot of effect in the market, a lot of effect on the euro, especially on the euro. All right, so I need to know what to expect, etc. This has to be part of my trading plan. All right, so we're going to analyze each currency and update ourselves every morning, every time before going into trade. We will find, this basically will give you a chance to find great opportunities, opening a lot of doors for you to open a simple and efficient trade. All right. Now, if, for example, we have a BlackBerry, a smartphone, any smartphone, all right, we can find, for example, on any application, news about the market, Bloomberg, anything else, for example. All right. So what we need to do is that we will need to learn exactly how to minimize our losses and maximize our profits. All right. This is part of our strategy program. All right. That's what I'm going to teach you. We're going to start our first section of minimizing losses and maximizing profits later on in our second section of the webinar. All right, we're going to learn exactly how to open short positions. Now, what exactly are short positions? Short positions are positions that will guarantee you most of the time profit. And thanks to this, you will find wonderful, great opportunities, all right, to minimize your losses and maximize at the highest level of profit. Now, we will need to know exactly how to apply technical and fundamental analysis. Now, this is exactly the whole program of Market Madness. All right, we need to know exactly how to use indicators, how to set up our lines, our alerts, how to analyze our fundamental analysis. This exactly, if we learn at the end exactly how to analyze everything that I'm going to teach you, and if you follow exactly what I'm going to tell you during our program, trust me, this will lead you by far at a long way to a successful trade. All right. I personally used to work with a client of mine that started off with $50,000 of deposit. Sorry for that. And we started working together, and thanks to our teaching, thanks to our analysis, exactly what we're doing right now during all our program. All right, we learn exactly how to use these indicators, how to use the lines, the alerts, how to analyze the fundamental analysis, etc. And this client, all right, he went from depositing $50,000 and profiting $250,000. All right, and it took us about 2 months to analyze a certain currency, and it brought us a lot of success thanks to that. Now, very important, part of our trading plan, okay? Before we even start trading, on our trading plan, we need to write everything down. This is the most important thing that you will need to know, writing down everything. If you write down everything, I can assure you that you will be making more profit than ever. Because if you write down everything, you know exactly what position you are taking. Instead of opening an anonymous trade, you will know exactly what position you're taking. So let's say I want to open a position on the Euro CHF. I want to open a position when the Euro CHF reaches a certain currency. All right, I want to put down my stop loss. I want to write down my stop loss and my take profit. All right, next to it, I want to put my results, the results of my indicators. All right, and the summary of the currency market, meaning that I want to know exactly, okay, what is set for today? All right, President Draghi speaks today. I need to know exactly what to expect. What is he going to speak about? What effect could it have in the market if he talks about this or if he talks about that? All right, this is basically the key to successful trading, writing down everything. Now, knowing when to trade. All right, on your trading plan, you need to know exactly when to trade. First of all, let me give you a small hint. All right, trading from morning. All right, it depends on what country you are set. But let's say we're going to take Dublin time, or maybe, you know what, even better, GMT 0, okay, London time. All right, London time, it is not best to trade in the early morning. In London time, you need to trade, for example, starting at, I would say 9 to 10 a.m. All right, simply because that at the beginning of the morning, all right, a lot of volatility is set to the market, meaning that if it's very volatile and you're opening a position on buy, it is very possible that it's going to start going up a bit, but then it's going to fall back down excessively. So this is not very suggested by myself personally to trade during the morning, unless if it's 9 a.m., 10 a.m. Starting at 9 a.m., I think the air should be clear on trading. All right, limiting your trades. Very, very important. You need to know exactly to have a limit to your trades. Do not open a lot of trades. Do not open several trades on the same currency, especially on the same currency. I don't want to open 5 trades on the euro US dollar. I want to open 1 trade or maybe 2 trades maximum on one currency. All right. I want to set, for example, it's very important on your trading plan to know how many positions you will be opening per day. So let's say Monday I will be opening 5 positions total. At the end, whether I'm winning or losing, it doesn't matter. I close my position at 5 trades. This will limit your losses, because if, let's say, you lost, for example, let's say I lost $100, all right, and I opened 5 trades already, and my goal was 5 trades per day, I don't want to open another position or 2 other positions or 5 other positions to give it a bigger risk that I could lose more money. I prefer waiting tomorrow, analyzing again tomorrow what's going to happen, and having a better chance of opening my trades. So let's say on the Euro CHF or on the Euro US dollar, I want to open 3 trades on the Euro CHF. On the GBP JPY, for example, I want to open 2 trades. And on a certain currency, I'm opening another trade. All right, limiting your trades. So every day you need to know exactly how many trades per day you're going to open. If it's a total of 10, make sure that every trade is separated to every currency. Like I said before, I can put 2 trades on one currency, 2 trades on another, 2 trades on another, and so on, and I will have 5 currencies on which I will be trading. At the moment, what I want you to do is to pick 3 currencies. And if you want to open 10 trades, I would suggest to open 9. So you can put 3 on one currency, 3 on one currency, and 3 on another. All right? Or play with it. Put 1 trade on a currency, 3 on another, 3 on another, 3 on another. All right? Again, it is not best to open too many trades. I have one of my clients open too many trades on a same currency, and at the moment he's at a huge loss. This is not the best thing. All right? And it's not only one client, it's a lot of clients. Now, the reason why I'm telling you this is because another key to successful trading, do not follow your emotions. All right? I have a lot of clients, for example, that open trades because they're eager to open trades, or they're too stressed. I'll give you an example. And please listen to exactly what I have to say, because maybe you're going to laugh, but it is very much true. If, for example, I'm opening a trade, all right, and I'm profiting a bit, I would like to close the position as soon as possible. When I'm losing right now, when I'm opening a trade and I'm at a loss, I'm going to keep it opened because I think that it's going to go back up. This is the worst thing that you can do. All right? It's funny. Some of you can laugh. Some of you can tell yourself, yes, Adam's right, but it's true. All right? Do not let your emotions get in the way in your trading. All right? If you're at a loss, all right, always put a stop loss. It is the most important thing. Put a stop loss. If you're losing, there's no point of losing even more. Do not expect the market to go back up. Your trades need to be set at a profit only. If you're losing, if for example I'm opening a large trade, for example, all right, let's say I opened 5 lots, all right, and I start at a loss of $500, all right, I don't need to worry, all right, as long as I have my stop loss, I do not need to worry because I'm putting a limit to my losses, all right. Very important to put a limit to your losses. Now, if it goes back, for example, let's go back to the example of the 5 lots. I'm starting the moment that I open the position. 5 minutes later, I'm at a loss of 500. All right, and my limit to my loss is, let's say, 2,000. All right, I can still keep going on. I can still keep going on my trade because yes, there is a chance that the market could go back up. Right? Remember that market goes up and down. It's very volatile. All right, but do not change your stop loss. Do not modify it. Don't do anything. If you put a stop loss, you're putting a limit. And if you do not put a stop loss, it means that you're not putting any limit to your losses. And this is the worst thing that you can do. Now, if, for example, you're opening too many trades in your account, the only thing that you will be making and putting is only pressure to your account. Even if you're making profit, there's another position that is hedged and making your profitable position going against you. Now, also, which will be part on our fundamental analysis, all right, is following events. Now, on your trading plan, you need to know exactly what's happening in the market, what happened yesterday, what's happening today, and what could happen tomorrow. All right. The reason why, all right, is simply because it'll give you in advance what's happening right now in the market. I'll give you an example. The example, as you can see here. Last year, what happened is that there were certain countries that were under crisis, meaning that they provided a lot of loans that the banks could not even cover. Now, what happened is, for example, again, President Draghi spoke. What he did is that he provided a bailout plan. What is a bailout plan? A bailout plan is, for example, if a country cannot cover its loans, all right, the European Central Bank will provide them money, all right, to cover these loans. Now, let's think a bit. If I'm printing out a lot of money to cover a loan, it means that the value of the money is losing its value. That's what I meant. The euro, since European Central Bank provided money to other countries as a bailout plan, it means that they printed out a lot of euros. And when you print out a lot of euros, the value of the euro is weakened. All right. For example, let's say I have a huge store. All right, a toy store, and I have a lot of one toy, of the same toy. Now that same toy, I'm gonna sell it at a much lower rate than if I had less of this certain toy. Exactly what I meant. All right. Now, again, following events is very, very important. Okay. We will analyze future companies later on after our strategy market madness program. We will learn exactly how to analyze future companies, stocks, what stocks can have an effect on currencies, what effect they have on currencies. We're going to learn exactly about bailout plans, unemployment rates, etc. Now, if we learn how to analyze this, it's going to be the perfect way, not only on not only technical analysis wise, but also fundamental analysis. All right, this really will lead you to a successful trading, profitable trades from the market. That's for sure. Now, also very important is to keep track of your trades. Whether you're making profit or you're not making, or you're making a loss, it is always best to keep track of your trades. For example, if I open a trade and I saw that I was making profit out of it, all right, I need to know, why am I making profit out of it? Okay, because I saw that, all right, there's a normal volatility, and I use my indicators, especially a certain indicator, and I want to use it again on normal volatility. Or if I opened a long position because the euro US dollar went up, I want to know why it went up. Oh, okay, because, for example, President Draghi provided a bailout plan. All right, so every time that President Draghi provides a bailout plan, the euro US dollar will go extremely high. All right, so I need to know exactly what's happening in other countries, what loans can't other countries cover, etc., etc. All right. If I lost on a position, I want to know, why did I lose on that position? Maybe because my stop loss was too low or was too high. Maybe my take profit was too high or too low. Any reason why you made any losses or any profits, you need to know why. All right, you will understand better the market that way. Now you need to know this is part of your trading plan. All right, also very important. This will keep yourself safe, all right, from any losses possible. All right, making yourself a weekly target. Okay, making yourself a weekly target will only bring you a better trading, because for sure, a lot of people are eager to make a lot of money. Making a lot of money takes a lot of patience. In the Forex market, it's not easy to make $100,000 in one day. Not easy at all. All right, unless you have the best strategy in the world, all right, which is very rare. All right, it's not easy to make $100,000 in one day. It takes a lot of patience. All right, what you need to do is that you need to set yourself a weekly target, a weekly profitable target. So let's say I deposited, for example, $1,000 in my account. I expect to make at least 10% by the end of the week. I want to make $100 by the end of the week. All right, so I'm going to limit my trades. Okay, so Monday I'm opening 5 trades. Tuesday I'm opening 5 trades. Wednesday, Thursday, Friday. Okay, and this will help you a lot to open good trades, not big trades. This will open many doors to better trading, because you're limiting yourself. All right, if you're limiting yourself, it is the best thing that you can do. Why? Because if you open too many trades, like we saw before, or you're opening a too big of a position or anything else like it, all right, it's not also always good, because you're letting your emotions take advantage of you and making you lose in the market, which is not best for you, especially for clients that have a large amount in their account, and they're letting their emotions guide them to trading. It's not always good. Always in the Forex market, you need to use a lot of your head. Okay, a lot of thinking. It's a lot of analysis. It's a lot of analysis before you even start trading. Okay. All right. Again, like I said before, it takes a lot of patience. Here in the title, a large deposit of patience. Making money in this business takes a lot of patience that you will need to have. Now, when you're done building your trading plan, then you can start opening a trade. So basically what I did is that on my trading plan, I have a certain currency, I have all my analysis, I have everything in place, all right? I have my stop loss and my take profit. Then I can start trading. Now I'm going to leave, before we start our second section, all right, I'm going to leave 5 to 10 minutes to ask any questions on the chat. I will repeat the questions and I will gladly answer them. So I'm going to leave 5 to 10 minutes, starting now. All right, we have a question. If I'm going to use charts, yes. On my second section, we're going to start our first strategy. Well, basically, I wouldn't call it a strategy, but yes, we're going to start using a strategy, and I'm going to show you examples with charts. Now, how do we choose our currency pairs? Well, basically, I would suggest to see what currency shows you a lot of volatility in the market. All right. For example, I choose the Euro CHF. All right. I use the Euro US dollar. I use plenty more currencies because I've been trading for a lot of years. I use certain currencies. I use, for example, the JPY is very, very interesting. The GBP JPY, Australian dollar JPY, Euro US dollar is the most common one. I would say the Euro, the US dollar, the JPY, the GBP. Yeah, they're very efficient if you want to choose a currency. Pairs, again, it's your choice. All right. What you need to do that in every pair that you choose, all right, you need to analyze them. If I have a template for a trading plan, I can make a template for a trading plan. It's not a problem. The thing is that I can make a template for a trading plan. Maybe I'm going to use it for our next course next week. But the thing is that I want you to build a trading plan yourself. I'm going to show you a template. I'm going to make a template. I'm going to show it to you, and you'll get a better image of how to use a trading plan. Some life analysis would be great help. Okay. Again, the best life analysis that I can teach you is that do not let your emotions get in the way. All right. Always think. All right. Never be afraid. All right. If you lost in a position. All right. Don't rush. Never rush into things, especially into trading. It's not going to give you. It's not going to give you. It's not going to lead you anywhere. To rush, it's not going to lead you anywhere. Have patience. All right. Patience is the key. Now, for example, what is not best to do is that the thing is that in opening a position, all right, there's a big difference whether you have $100 in your account than when you have $1,000 in your account. If let's say you had $1,000 in your account and you're down by 500, then you close and you have like a balance of 500, it's not very best. Your chances of making profit are less higher than a trader that has 1,000, 5,000, because if you have $1,000 in your account, you have a larger leverage. All right, a larger leverage gives you the opportunity to open more trades, and if you can open more trades, you can open more sure trades, and then with what we're learning, you have better chances of profiting from the market. Is this webinar available after completing? Well, I clicked on record, so I hope that it's going to be recorded. If it is, not a problem, but I'll make sure that by tomorrow, because tomorrow I'm making another webinar, the same webinar as today. I would be glad if you also join again, because it's a very, very important course. All right, at a point where I have to repeat this course again. But I'll see if the recording was a success. If it was, for those who want to have the recording, it's not a problem. I'll send it to you. All right, can I make money daily at least $100, as in my account has $1,000? It is possible. It depends. It depends only with you. All right. Like I said, you need to put a target, daily target, weekly target, monthly target. Everything depends with you, because to be honest, even if I'm providing you with the greatest strategy, it is very possible it's not a strategy that will work 100%. It is a strategy that will work most of the time. All right? Remember, I say most of the time, but I never say all the time. So with $100 of profit, it is possible. All right? Again, everything depends with you. How to limit your trades, how to analyze, what to expect from the market, etc. After that, when you start opening your trades, following my guidance, it is possible to make $100. I wouldn't doubt it. I'm going to leave another minute. If I provide any strategy, do I provide any strategy daily or signal? I don't provide strategies daily. I provide strategies weekly, all right, on my webinar only. Now, there are some clients, all right, that I do personally. I train them personally, but these are clients with a very large amount in their account. There's a minimum of $10,000 of deposit to be guided by me personally. Now, the reason why I did the webinar is because not a lot of people can deposit $10,000. All right, so I'm making it easier for clients to participate in the to participate in the strategy program. Yeah, exactly. That's what I'm doing. I'm giving them a chance. I'm making it much easier for clients to use these strategies instead of depositing $10,000 and having a private course with me. All right, so let's continue. So this is our second section of our webinar. Sorry. Now, oops, sorry. Now, the subject of the first section is minimizing losses and maximizing profits. All right, so what I'm going to do is that I'm going to teach you how to minimize your losses and maximize your profits. Now, we're going to start using our first strategy. Remember, this strategy, like I said, personally, I would not call it a strategy, but I would call it a better way of trading, the best way of trading. And now, before we continue, I'm going to answer one last question. Have I already done any other webinars before that are available to download? Unfortunately, no. This is a new strategy program. I've worked on it several weeks now. So from now on, I will be downloading it, and we'll see if we can send it to every client. It's not sure. It depends with the CEO of the company, because these webinars are the CEO of the company shows that these webinars are very, very valuable. All right, so providing them to everyone would maybe be a problem. I will fight for my clients. I'm not the type to make them as available as they can be. Now, let's continue to our section. All right, so this will be our first strategy. I'm going to start teaching you how to minimize losses and maximize profits slowly. All right, remember this course is separated, and this subject is separated in two courses. So don't worry if there's something that was not clear or missing. I'm gonna repeat it in our next course, and then I'm going to complete our first subject. I will complete our first subject with everything inside, so nothing to worry about. All right, so before I even start showing you charts, I need to tell you exactly for our first strategy, what you need to do. Okay, so we're going to start using basics only. Basics are the best thing. Using too complicated things is not always best. We're going to start using complicated things later on, but what is best to do is to first know your basics. Okay, now when you open your platform, the first thing that you need to do is that, let's say I'm looking at the euro US dollar, for example. What I need to do is I need to know, okay, let's say it's 10 a.m. or it's 12 p.m., whatever day it is, whatever hour it is, sorry. All right. I want to know what is my highest rate and what is my lowest rate. Now, resistance, okay, highest rate of the day is called resistance. All right. After this subject, I'm going to use words like resistance and support only. Now, resistance is the highest rate of the day. Not the whole day, but the moment that you entered your platform, you need to analyze the highest rate of the day. All right, which is your resistance. And the lowest rate of the day, we call it support. Now, why do we call it resistance and support? Because if it's the highest rate, all right, it has a resistance. And if it's the lowest rate, it has a support, meaning that it doesn't go past, it doesn't pass through the highest rate, and it doesn't pass through the lowest rate. Now, also, what you need to do is that you will need to calculate the average of the highest rate and the lowest rate, the resistance and support. Personally, I would call it average 1, and I'll teach you exactly. I'll tell you exactly why I will need to take average, and then why I will need to take. I will need to call it average 1. Average 1. I'll use it much more in our second part of the course of the subject, which is next week. Now, how do we calculate the average of a highest rate and lowest rate? Very simple. Okay, we take the highest rate of the day, we take the lowest rate of the day, we add the highest rate to the lowest rate. So if and we divide it by 2. So if let's say the highest rate is 3. And the lowest, the highest rate is 5, okay, and the lowest rate is 3. So 5 plus 3 divided by 2 is 4. So 5 plus 3 is 8, divided by 2, it's 4. 4 is the average rate, the average of the highest and the lowest. All right, we're going to call it average 1. Okay. Now remember, all right, let's take back the trading plan, all right, let's say we call it a paper, all right. Remember that your trading plan can be either on paper, on a book, or any piece of paper, or even on the computer if it's easier for you, all right. You need to know exactly, okay, on this currency, how many trades per day I'm going to use, or in every currency or any currencies today, how many trades I'm going to use. Let's say I'm using 10 trades, all right. I'm going to open 10 trades today. On this currency, I want to open 3 trades. All right, and then I have 7 trades left to other currencies. Okay, lot size compared to balance. All right, now let's say I have $100. I cannot open a lot size of 1. Okay, why? Because the lot size is much higher. One lot would be $100,000 leveraged. But the thing is that if, let's say, you have $100 in your account, if you leverage it by 200, meaning that you have $20,000, $20,000 leveraged. Now, if you open one lot, which is $100,000, all right, it's useless. You cannot open it. That's why I consider, all right, and I suggest to have a decent amount in your account. All right, personally, if a client asks me what is the best amount to start with only, I would personally say $2,500. $2,500 or $2,000 even. All right, $2,000 is great. All right, because not only you're leveraged, also your margin is much higher, and you can open many trades. Now remember that on your trading plan, you will need to write down your stop loss and your take profit. Very important. I'm going to repeat it every time. put a stop loss and a take profit. Now I'm going to show you later on where to put our stop loss. Okay. Now, average stop loss. Okay. Okay. We will use our average as a stop loss. Okay. So if, let's say, on this strategy only, all right, we're going to use our average as a stop loss, and I'll show you why later on. Okay. This will help us limit our losses so that we can set a stop loss at a certain currency at our average. All right. So we can assure ourselves that if the market goes against us, it's limiting our losses. Okay, so again, like I said before, what is our average? Okay, again, I call it average 1, AV1. AV1 is our highest rate plus our lowest rate divided by 2. Remember that opening anonymous trades will never ever help you minimize our losses. It will only just, opening anonymous trades, I don't want to open, for example, 0.5 lots on Euro US dollar right now. Now, I don't want to do that. This is the worst thing that I can do because it could go against me. I didn't put any stop losses yet, all right, and I'm already at loss. That's not what I want. What I want to do is I want to write everything. I'm going to open a position if something happens, all right? You're going to write down what should be happening, your expectations, all right? If it happens, I would like to set my stop loss at this, and I would like to set my take profit at that, okay? All right, now we need to also be ready for how many pips we are willing to use on our trades. This will help you limiting your losses. If you have, for example, if you open the trade of $1,000, all right, I'm willing to lose $200. Okay, so I'm putting a stop loss if I'm losing a maximum of $200. Okay, again, stop loss can also, it's either you set a stop loss at a certain rate, or the minimum of pips of difference that you need to set your stop loss is 20. All right, so let's take an example what we're going to do. Okay, so basically this is our strategy. Now be ready for what I'm going to teach you. All right, we're going to use a strategy called resistance and support. Okay, it's very simple. All right, you're gonna find it amazing because I'm using only basics. I didn't even use any indicators. I'm just putting 2 lines, and that's it. Okay. On the Euro US dollar, all right, what did I do? I set up a line. Let's say here, as you can see, all right, this is the start of the day. Okay, let's say I woke up at 10, all right, heavy sleeper, and at 12 I opened my platform. So here, as you can see, at 12 the rate was at a certain rate. We don't know yet because it doesn't show. Let's say I open my platform and I'm here. Okay. Now what I have to do, okay, this is, I'm putting a vertical line here just to tell me what day, when did the day start. Okay. Now here it doesn't matter. Don't pay attention to the line here because I just took a simple day, day of the week. It was two weeks ago, I would say. All right, so I just picked up a day. So let's say today is the 7th of January. All right, so this is what I picked. I woke up at 10. I started opening my platform at 12. I see this currency. Okay. And now here, what I need to do is that I put a vertical line here at the start of my day, and I'm putting a horizontal line at the highest rate and at the lowest rate. So as you can see here, I put an arrow to show you that this was my highest rate of the day. And here, I'm showing that this is my lowest rate of the day. Okay? Now, bear with me here because this is where the strategy begins. What I want to do is very simple. If the market rate breaks my resistance, my highest rate, so meaning if it breaks, meaning that if it passes through the resistance, the highest rate, all right, I'm expecting it to go long, all right? I want it to go long, okay? Meaning that I want it to go back up, so I'm going to buy the position when it breaks only, right? And if it goes, when it breaks the support, if it goes lower than the lowest rate, all right, I would like to go short. Short is a sell position. As you can see here, I put my highest and my lowest, all right, and it broke at the resistance. As you can see here, it broke and it started going up. All right, so it depends on how many lots that you opened. One way or another, you made a very, very decent amount of pips. And I'm going to show you how this is the most efficient strategy in the market, whether it's resistance or support. I use the euro US dollar at a level of resistance, all right, when it broke the resistance. Here, now, if you can see here, there's a difference of the day, the 7th and the 8th, all right, so this I took one day after another. Okay. Now, euro US dollar support. Now, it finished here, so we made a decent amount of profit here, or it could even reach here, and you close your position. Now, just to remind you that the chart that I'm using is very, very different than the chart that you are using. I'm using a different platform. This platform is only, for me, the platform that you see right now is only meant for analysis. It's not the MetaTrader that you have from Sunbird. Here, you see that, all right, again, beginning of the day, I woke up at, let's say I woke up at 9 this time, or at 10, whatever, it doesn't matter. I woke up at 9 and I opened my platform at 10, all right, and I can see that I'm putting, again, vertical line on the day. This is the start of the day, okay? And I'm putting a horizontal line on my highest rate, which is my resistance, and my lowest rate, which is my support, all right? So I'm telling myself if it passes through resistance, go long, open a long position. And if it passes through, for example, my support, meaning when I say if it passes through, I'm going to use the word break. If it breaks through my support, which is my lowest rate, I'm going to go short. I'm going to make a sell position. All right. Here what happened, again, exactly as I expected. It broke my support and it went down. And what happened? I made a decent amount of profit. Whether I opened 10 lots, I could have made easily $2,000 at once in one day. Now, okay, I have a very interesting question. What time frame am I using? All right. Using the support and resistance, I would prefer using the 30 minutes. All right. 15 minutes also is okay, but most efficiently would be 30 minutes, 1 hour even sometimes. If you're opening a position that will take that you want it to take more time. Let me explain exactly why I'm saying that. Simply because if, let's say, you're an investor that wants to invest in a certain currency, or maybe let's say in the gold, okay, and you're telling me, okay, Adam, I want to invest a lot of money in the gold. All right, I don't want to open closed positions. All right, I want to open a large positions that could take a week, a month, a year, 2 years, depends. In that case, I would use more 1 hour, 2 hours, 4 hours, 8 hours, daily, weekly, monthly, etc. All right. Here we're setting up a stop loss and a take profit. Okay. So basically, we're using, for example, 30 minutes, 1 hour maximum. I would say 30 minutes to 1 hour would be the best thing. 15 minutes is also okay. 15 minutes is also efficient. Okay. What if okay, I have another question. Okay. What if at the time I check it is somewhere between the support and resistance? So if I understand clearly, the rate is between support and resistance. Support and resistance is not rates that you just put in. All right. Whether anywhere that the market is, you take the highest rate. Since the moment you opened your platform, you take the highest rate and you take the lowest rate. All right. Here, I can say that this is in the middle of the support and resistance. But you need to remember what is my resistance and what is my support. My resistance is the highest rate of the day, and my support is the lowest rate of the day. Then I analyze, I expect, and I open my position. Now, now that you know exactly what to expect and how to open a position, I'm going to teach you. Okay, well, I'm sure you must be asking, okay, Adam, thank you for showing me the strategy, but what about my average? What about my stop loss? What about my take profit? Very interesting question. All right, on which I will be answering. All right, let's say here. Oh, sorry. Not yet. Let's say here. Okay, it broke through the resistance. All right. Now, what I taught you right now is the strategy. Okay. Let's learn right now how to limit our losses. Okay. So we have our highest rate. We have our lowest rate. What is exactly the average of the highest and lowest? Is the rate of the average plus the lowest, the highest rate of the day plus the lowest rate of the day divided by 2, and we have a line between them. All right, here is our line between the highest and the lowest. Okay, this is the line. Now this is your stop loss. Okay, if let's say it breaks through the resistance, as we can see here, your stop loss is not at the lowest rate. It's at the average here. Okay, so it breaks through, and if it doesn't go through, all right, if it doesn't go through, if it goes against you, all right, you're losing a minimum amount of pips instead of a maximum amount of pips. Maximum amount of pips is any pips below the average. Okay, if let's say it breaks through the resistance, the support, sorry, like here, your average is here. All right, highest plus lowest divided by 2, a line between the highest and lowest, which is your stop loss. You're going short, and your stop loss is right here. That's about it. That's all you need to know about the stop loss for this strategy. Okay. Now the take profit. In cases like that, all right, where you see that it breaks through either the highest rate of the day or the lowest rate of the day, okay, the take profit sometimes isn't that low. Okay, you can put the minimum amount of take profit that you can put is, I would say, 20 pips of difference. Okay, what you can do is that you will see, I'll teach that later on, all right, and I'll refer especially this course, is that you can put, for example, a trailing stop. What is exactly a trailing stop? Trailing stop means that, let's say you have a stop loss here. All right, let's take the resistance. Oh, sorry again. Let's take the resistance. We have our stop loss, and we set up a trailing stop of 20 points. Okay, 10 points is 1 pip, so 20 points, it's 2 pips. All right, so it broke through, and I'm starting to make profit. Every 2 pips of profit that I'm making, my stop loss gets higher. Okay, so my stop loss gets higher. and it goes along with my profitable trade. Okay, so this could limit your losses even more, but for now I wouldn't suggest to use it right now, because I'm going to teach you later on our pending orders course what are the advantages and disadvantages of the trailing stop. Okay. Now the stop loss is not a pivot line. Okay, just for you to remind you, a stop loss is a stop loss, period. It's the average of the highest and lowest. Okay. Just please, I know that you're asking a lot of questions. All right. Just keep the questions until the end of the course. Don't worry about it. I'll answer everything. I would like just to finish our course very quickly so that I can have time to answer all the questions available on the chat. Okay, so again, just to review very quickly, we have our highest and lowest. If it breaks through the highest, we go long, we go buy, and if it breaks through the lowest, we go short, we go sell. All right, we have another example. You're going to see that this is very efficient on most currencies. All right, for example, the GBP US dollar. On the GBP US dollar, again, I took the highest rate of the day, the lowest rate of the day. If it breaks through the highest rate of the day, I go long, and if it breaks through the lowest rate of the day, I go short. As you can see here, it broke through the highest rate of the day, and I made a much more decent amount of pips of profit. All right, same thing. Again, GBP USD support. If it breaks through the support, I have my highest rate of the day, my lowest rate of the day. All right, it broke through the support, and I made a decent amount of profit. Again, it's the most efficient strategy in the market. Very simple. I'm only using basics, not using anything else. Okay, so let's have an overview of the course. We're going to finish the overview of the course, and I'm going to answer all the questions that you're asking me. All right, and we'll call it a day. Okay, so again, let's review. Decide how many trades per day that you're going to open. All right, if let's say I'm opening 10 trades today, I want to open 3, 3, 3, and 1 elsewhere, for example, or 4, 3, 3. Depends. I'm just giving an example. Remember to open that the amount of trades that you're opening need to be compared to the amount of money that you have. If you have $100 in your account, there's no point of opening more than 2 trades. Okay? Again, analyze your currency. All right? If let's say it's the the GBP JPY or the GBP USD, all right, analyze it. All right? Put your lines. Okay? Calculate your average and call it average 1. And I'll teach you exactly, and I'll explain exactly why am I calling it average 1 in our next course next week. Okay? Write down your stop loss and write down your take profit. Remember to write down all the trades that you're going to open. All right? Write down your stop loss and write down your take profit. Okay? When everything is done, open your trade. When you open your trade, you're good to go, and this is our first strategy of our course. Okay? Just reminding you that you can join us on Facebook, on Google+, Twitter, YouTube, Intel. Okay, or you can join us at www.sunbirdfx.com. I'm going to answer all the questions. I'm going to give 5 to 10 minutes to answer questions, and then I'm going to give you all a competition. All right. There's always a competition in every course that I give. All right. I'm going to give the competition at the end exactly of our course. All right. And yeah, well, I'm giving 5 to 10 minutes to ask questions. Feel free, and I'll answer them happily. All right, so I'm going to answer the questions, and then I'm going to give you the competition, and then we will be finishing our webinar. Okay, so we have a question here. What if we didn't get clear breakthrough? It just passed through to support 5 to 8 pips and reversed to average level. Well, it happens, all right? Like I said, it is the most efficient strategy, all right, but it's not 100% sure that you're going to make 100% of profit, all right? That's why I'm setting the stop loss at the average. If I'm having the same webinar tomorrow, yes, I'm having the same webinar tomorrow. Maybe I'm going to add a few things, all right? The reason why I'm adding the same webinar tomorrow is simply because it is a very important course, especially with the strategy inside, because this strategy is the most efficient strategy in the market yet, okay? Do I use this strategy in upward and downward market too? I don't know if I understood the question. All right, it would be best if you send me an email to explain a bit better. I'll put my email later on, especially for the competition. All right, I guess this is about it. All right, here we have a tip. For MT4 users, all right, if we press Control Y on a chart, it will show a vertical line at the start of the day. All right, here we go. Here we go. All right, so this is I guess this is about it. All right, so here's the competition. By the next webinar, meaning next Wednesday, all right, the person with the most volume, all right, from all the users, what you need to do first of all is to send me an email with a code that I'm going to enter to all of you. All right, so I'm going to write down the code. All right, what you will need to do is that you will need to send me an email at info@sunbirdfx.com with your account number, your name, and the code. Okay, this will enter you to the competition. Now, here's the competition. The trader with the most volume by the end, by the start of the next webinar, will earn $100 of bonus, personally for me. Okay. Account number. Okay, we have a question. An account number is, I don't know how to explain this better, but an account number is a number of the account. For example, 75639. All right. So again, thank you very much for coming. I hope you all enter my competition as well. All right. Also use the strategy that I provided you with. All right. It will help you not only that you will be making profit, but if you're making enough volume, I will personally give you $100 of bonus. And this is only the start of our competition. I will be having much more competitions later on every webinar, and this will help you to trade better. This will push you to understand exactly how to trade more professionally. Remember that the goal of my webinar is to form you to be a professional trader. For demo accounts, for the competition of demo accounts, it doesn't apply. It applies only to active clients with active accounts, with real accounts. All right. Thank you very much for entering the webinar. Hope you all enjoyed it. All right. If you need anything, please send me an email at info@sunbirdfx.com. Remember to enter the competition. Okay. Thank you very much. Have a pleasant day, evening, morning.